Alrighty, what's going on, everybody? Welcome back to another fundamental video breakdown. We're going to just do a brief update discussing and talking briefly about what took place last week, how the market sentiment ended over the weekend, carried over into this week, and now trading into Monday, why the total cryptocurrency market cap is up roughly around $93 billion as of time of recording, still lingering onto the market sentiment from last week as nothing has shifted. The market is still aggressively pricing in a high probability of continued interest rate cuts from the Federal Reserve. We also had some net positive announcements for risk assets surrounding some of the political spectrum in the Japanese area. We had a new or a pending new prime minister voted in, and she is relatively dovish in monetary policy and supports further easing in their monetary policy from the Bank of Japan. So we had that happen over the weekend. We had some positive announcements between Hamas and the United States and the Middle East tensions, all things that we had previously discussed and talked about, possibly weighing further on risk assets for the time being, have actually supported risk asset sentiment, which has carried us into this risk on environment. And so we've been tracking this in full detail in previous video breakdowns. But this again just goes to show why these important video breakdowns are so paramount to everybody's journey in this community. So that way we understand what's going on. We understand the sentiment that could possibly shift given the change in headlines. And we're just going to continue to track these things. All right. So going back to our yesterday's report, this report is very thorough and detailed and will pretty much touch on everything in the current landscape and then what we need to be paying attention to moving forward in the coming days as the government shutdown is still lingering, which could postpone key economic data. If that does happen, then the narrative is most likely going to continue to lean more so towards aggressive easing, as the Fed's going to continue to go off the last data report that they got, which we know was net negative, not net negative, but showed signs of continued cooling in the labor market data, which is why we saw those increased probabilities of rate cuts. And then also, of course, whatever deterioration in the jobs figures come of the extended government shutdown. All right. So we're going to touch on that. This is also going to cover the Bank of Japan news for you guys. I'm going to read the screenshots that I've incorporated in this because some of the findings that I gave you guys in this report are very detailed and clutch. And then at the end of this report, it goes into what we need to see moving forward. We'll do a quick projection. We'll take a look at XRP and we'll take a look at the total cryptocurrency market cap via what could take place this week, depending on market sentiment, look at some levels. And then after that, I want to roll into just a brief talk on kind of what I would like to do, what I hope to do, what I plan to do after hearing some of the speakers at the recent Centrifuge event that took place, particularly one of my favorites, Christine Moy from Apollo Asset Management, and what she talks about in this, and then just kind of building my mindset and my future portfolio off this ideology behind retiring off of your savings. And it just kind of goes hand in hand with what we've discussed previously, that I would like to build a stablecoin portfolio of a minimum of around $500,000 and be able to live off that. Now, I'm not going to live off of it, but be able to and have the ability to just disappear from the internet, have a substantial amount of capital in stablecoin pools, be able to use that yield for other things, borrow against that position, so on and so forth, and just having that capital in stablecoins to do things with. I'll touch on that once we break that down, but I want to actually show you guys some platforms that I found that coexist with my strategy and the APYs that I would like to aim for in that strategy. So I'll break that down for you guys today. I created a little visual for you all, and then I just want to show you all how I found all these protocols, these lending platforms, and these DEXs that I'm going to be looking to provide liquidity on for this strategy. And we'll go over all that as we persist. All right. So that's what we're going to cover in today's call. I just wanted to give you guys a little thorough backdrop. All right. So starting back on yesterday's Sunday update. And the reason why I usually drop these reports on Sunday is because overseas, it's usually Asia sessions Monday, right? So usually we start to have things kick off that are worth our attention. So this is yesterday's report, October 5th, 2025. The crypto market entered the weekend on a strong footing, holding on to last week's gains as risk sentiment remained intact despite the U.S. government shutdown. You can see here, this reads, the Federal Reserve needs to cut interest rates. One of the main reasons the stock market, i.e. risk assets, has boomed is the expectation that the Fed will deliver a string of cuts to interest rates. Traders on Wall Street are largely expecting, this is important, key vocabulary, expecting, because again, we need to start to get the brain juices flowing and the playing chess with the markets. If what the market is expecting doesn't happen, we already know in this community how the market sentiment's going to likely flip on its head. All right, so just pay attention to key vocab. Traders on Wall Street are largely expecting the Fed to cut interest rates at least three more times. There's another key importance, three more times by the middle of next summer, according to data from the CME Group. Fed officials themselves have indicated that they are likely to cut because the job market is slowing. So the reason why I incorporated that is because, again, if from now until it says the middle of next summer, we see the likelihood of or an increased probability of more cuts from the Federal Reserve, that's likely going to continue to drive risk asset sentiment higher. So maybe because of upcoming data, we see the market start pricing in 4 or 5 rate cuts. That would be aggressively bullish for risk assets, right? At least we can assume so based off of historical data. Inversely, if the market right now is largely expecting 3 cuts by the middle of the summer next year, then guess what? If we start to see those expectations dial back, we don't see the Fed cut three times, i.e., what the market's pricing in right now, and we start to see headlines that weigh on this aggressive pricing in of interest rate cuts from the Fed, we know in this community it's likely to dampen market sentiment and dial back a lot of the optimism that's being priced into the market. Right. So that's why I try to incorporate these little tiny screenshots for you guys so you can start to think about these things in terms of, all right, looking into the future, what could we do? How could the market position itself depending on upcoming data? Traders continued to price in 3 near-term Fed rate cuts, 2 more in 2025 and 1 in early 2026 after a softer than expected ADP employment report last week, reinforcing expectations of looser U.S. monetary policy. The dovish outlook has been a key pillar supporting the rally across risk assets, including crypto, which currently trades around $4.2 trillion in total market cap. I could rephrase that now to 2.5, pushing into new all-time high territory. Japan's political shift. This is extremely important because, as you guys remember, if you've been in this community for some time, we've been monitoring very closely the likelihood of the Bank of Japan possibly hiking rates, which we know, historically speaking, has led in the past to an aggressive unwinding of the yen carry trade. In the moment, we know usually that is bad for risk assets. Well, that sentiment is starting to slightly shift, and the market's starting to price in the likelihood of a hold via the Bank of Japan at their next monetary policy meeting because of the political shift that just took place. Right. So here it says one of the major developments over the weekend was Japan's Liberal Democratic Party elected Sanae Takachi, hopefully I'm pronouncing her name correctly, an ultra-conservative China hawk and long-term advocate of Abenomics as its new leader, positioning her to become Japan's first female prime minister. Takachi is expected to favor, I highlighted this in bold, loose fiscal and monetary policies, which markets interpret as bearish for long-end JGBs in the yen. This aligns with the so-called Takachi trade, long Japanese equities, i.e. risk assets, short Japanese bonds that helped the Nikkei log a record closing high of 45,769 last Friday. Her stance could make it harder for the Bank of Japan to raise rates, supporting a weaker yen, which typically tends to boost global risk appetite, which is exactly what we're seeing right now, right? Bitcoin just hit a new all-time high. Gold just hit a new all-time high. Investors are attempting to hedge against the uncertainty from these fiat currencies positioned by these central banks. And so they're choosing alternative assets like gold. And in some cases, most recently, as we're not seeing any favoring demand for yen and the political backdrop, the government uncertainty right now isn't really supporting or propping up the dollar, investors are favoring, seems like right now, digital assets, which is a good thing for us as long as this momentum continues, right? So that's something that I added in this report, and we can read some of the snapshots. It says here, closing at a high on Friday is talking about the Nikkei, topping the record set the week before. Investors who bet that whoever succeeded Ashiba, which was the previous person in the chair, would be more dovish. And that's exactly the result that the markets got, right? They got a more dovish political leader. It says here, she seemed to have toned down her rhetoric recently, but ultimately the feeling is still that she will push for looser fiscal monetary policy, said James Athey, a fixed income manager at British Investment Group. Then here it also mentions yields on the 2-year, 5, and 10-year JGBs have all reached levels not seen since the financial crisis in 2008 on bets that the Bank of Japan could raise rates as early as this month's meeting. However, Takachi will make it difficult for the Bank of Japan to raise rates, so yields will go lower. And then down here it also says this is from a more recent report today. Takachi and her win in Japan's leadership removes uncertainty about the country's political direction. As the first woman to lead the country, her agenda is expected to continue a blend of fiscal support and ultra loose monetary policy. Now, the reason why I incorporated this, which I screenshotted this today, is because look at the vocabulary that they're highlighting in bold. It says fiscal support and ultra loose monetary policy. Then, if you come and you scroll up here, it's the same exact highlight when I wrote this report for you guys yesterday, a day in advance, the same vocab that I highlighted for you guys, just to show you all how like in sync I am with what I'm trying to teach you guys to pay attention to. So I thought that that was cool. However, to finish this off, I said this is a double-edged sword. So we need to be careful because if the Bank of Japan surprises with the pace or scale of future tightening, it could abruptly shift the sentiment towards risk off, given Japan's role in the global carry trades. All right, so we just need to be mindful. Right now, the rhetoric is optimistic. Right now, the market's starting to lean in favor more so of a dovish expectation from the Bank of Japan. If that changes at all and we see yen strength, or we see the Bank of Japan surprise the markets and actually start to favor a rate hike or hike rates outside of what the market's expecting, we already know, historically speaking, what that can do for risk sentiment broadly. All right. It can create unwinding of yen carry trades, and it can create sell pressure in risk assets. So we'll react to that in due time if the environment paints a picture like that. Moving on to the next development over the weekend and heading into this week, we had the Gaza ceasefire development. The second major development came from the Middle East. Both Israel and Hamas signaled support for a new U.S.-led plan to end the war in Gaza and release all remaining hostages, with indirect talks scheduled today in Egypt, which are actually currently taking place. We can see here, October 6, 2025, delegations from Israel and Hamas began indirect negotiations in Egypt on Monday that the U.S. hopes will bring a halt to a war in Gaza, facing continuous issues such as demands as Israel pulls out of the enclave and Hamas to disarm. So we're still waiting on, net positive results or net negative results from this ongoing talk. However, this paints an optimistic picture when there's no uncertainty in the market around geopolitical tensions and there's no bombs going off and people are happy and, the market's cheering that we're going to not see any further escalations. What does that tend to do? It tends to build an environment where investors are likely or more inclined to take on risk, right? And so this is good. This is a positive, a net positive if this momentum continues in this development for risk assets, especially considering the hindrance that these types of ongoing events have had on price appreciation in previous years before, right? Especially considering that this is now an ongoing 2-year war. So just another thing, I'm trying to show you guys something that was supportive of risk on sentiment. This was another thing, right? President Donald Trump told Israel to halt bombing as part of the deal, but warned that all bets would be off if Hamas delays. So we're just being mindful to see if they agree, if they move forward with the ceasefire, and if they do, it will likely be supportive of risk assets. Israel Prime Minister Benjamin N expressed hope of announcing hostage releases in the coming days. So there's another little key piece. So that's why I'm trying to get you guys to focus on this week. The plan involves an immediate ceasefire, a 72-hour hostage release window, a prisoner exchange, and eventually Israel military withdrawal after Hamas disarms. An international administration for Gaza overseen by Trump and former UK PM Tony Blair. While this represents a potential geopolitical de-escalation, we need to understand that uncertainty still remains over Hamas and the disarmament timing. An internal Palestine consensus, meaning the risk premium has not fully vanished. If tensions escalate, I repeat, if tensions escalate or the deal is not solidified, we could see market uncertainty continue, and this could lead to more favoring demand for safe haven assets over risk assets like crypto. All right, so we'll be on our key radar this week. For the U.S. macro backdrop, looking ahead, we have key U.S. developments that could make or break this risk-on rally. The government still remains in a partial shutdown with no clear bipartisan funding solution in sight. That was recently announced this morning. They still have not come to some type of term or agreement on when this government shutdown is going to end. So that risks delays to key data releases like foreign trade, jobless claims, budget statements. So that means this week the market will focus on the preliminary Michigan Consumer Sentiment Survey at the end of the week, which is on Friday, which is right now expected to show weakening confidence. And we will also be focusing on the FOMC meeting in minutes, alongside speeches from Chair Jerome Powell and other Fed officials that might take place this week that are scattered throughout the week. We need to understand that right now, investors are heavily betting on continued easing from central banks, and data or any commentary that challenges the rate cut expectations could swiftly dampen that sentiment. So if right now the market's pricing in a 95% probability that we're going to see a rate cut in October and an 80% probability that we're going to see a rate cut in December, and we get jobs reports this week, the government comes back into fruition and the jobs report shows strength in the labor market, and the interest rate probability in October goes from 95% to 75%. What's that likely going to do for risk sentiment? Can somebody tell me risk on or risk off? If we were to get a stronger jobs report this week, if, again,
Risk
that's a
off.
big if. What'd you say, Jamie?
Risk off.
Right? Risk off, right? If we saw, again, the market right now is not expecting the government to reopen anytime soon. So if we did see a scenario where the government reopened, they released the data and it came out showing signs of strength in the labor market, which dialed back and pushed back the likelihood of a rate cut this year and strengthened the dollar, it would likely lead to a risk off sentiment. Intraday, we probably see some profit taking. We probably see buyers trapped at highs, sellers becoming aggressive and starting to push price action down off of its recent all-time high in the total cryptocurrency market cap. Inversely, if nothing happens, if nothing changes, or if we did get data that favored continued and aggressive easing from the Fed, and at the same time, we see in the FOMC meeting in minutes that more Fed speakers favored continued easing in either 2025 or heading into 2026, and the market remains supportive of continued easing, then we're likely to see this rally continue. All right. As one strategist put it, interest rate and expectations of what the Fed is going to do are driving everything right now. This is a Morgan Stanley, I believe, economist that wrote this report that I got this from, where they said, I feel like interest rates and expectations of what the Fed is doing are driving everything right now. If the Fed doesn't cut as much as people are expecting, any of these areas that look a little speculative because they're not based on fundamentals, those areas will have some real problems. Like I said, markets are currently priced for a dovish perfection. Excuse me. That means markets right now are heavily fruitful because of the peaceful geopolitical developments, the continued expectation that Feds are going to ease, a non-hawkish Bank of Japan, and as long as ceasefire talks progress, Fed communications remain supportive of rate cuts, and Japan doesn't unexpectedly tighten, risk assets, especially crypto, are likely to continue rallying. However, on the flip side, if any of these things shift, meaning we see a shift in tone from Fed speakers this week, we see any stronger U.S. data releases that push back on rate cut expectations and strengthen the dollar, or we see any breakdown in Gaza negotiations or any surprise announcements from the Bank of Japan that bring back the likelihood of a BOJ rate hike, this could swiftly flip back risk sentiment to risk off. All right. So when you guys understand these headlines and what's going on, what's driving risk on premium right now, then you understand how to interpret it if the fundamentals shift, or at least why the fundamentals shift to risk off. Okay. So this is a very clear, concise report, very easy to understand. I dropped this in the chat for you guys yesterday. So let's just take a look real fast, just utilizing the deltas and just going over some simple if-then scenarios. So first, we'll take a look at the total cryptocurrency market cap.